You ever wonder where taxes come from? Me too. And since this is an oversimplification of everything, I'm also going to oversimplify the story of where taxes came from. So, Jesus was a gardener, right? He was just shoveling one day, one October evening. Next morning he wakes up, snow everywhere. He doesn't care. He's ripped. He's going outside. He's going to go shovel the driveway. It didn't take long to realize with his gardening shovel, he really can't move that much snow. And he was just thinking out loud, he's like, who's going to move all this snow? And his buddy Dennis was feeling super optimistic that day and just said, everyone! And taxes were formed. So now you know how that happened. Next thing, I will show you that branches of government are different. We do taxes all at the same time. And it's really because they all accept the same things as tax exemptions. We're going to get into that a little bit. First things first, let's see what Trudeau takes from us. Let's put a picture of his chin up here. Perfect. Draw out a nice rectangle. This rectangle represents $100,000. That's how much we made this year. Or that's how much we're pretending we made this year. I like to dream in color. So, of that $100,000, the first 45 grand is taxed at 7%. The next 45 grand is taxed at 13%. Finally, the last $5,000, or 10 grand, will be taxed at 20%. Now that's just Justin's take. So that's his budget he's got to work with. On top of that, this guy, Doug Ford, Old Dougie, that's what we'll call him. Old Dougie, just in case we forget. Ooh, that's pretty. There you go. Perfect. Old Dougie, same idea. Although he takes a little bit less. Provinces are a little bit smaller than the country. Same idea. This one, the interval is 45 grand. This one, 42 grand. Does it really matter? Not really. All you have to know is that you're going to get taxed based on the amount of dollars you make. If you say that you have to pay more tax than me because you made more money than me, I'm not going to believe you. I'm going to respond, you have to pay more tax on the dollars that you made more than me. You're not paying more tax on all your dollars, only the ones you made more than me. Other than that, it's fair all the way across. 9% and I believe the last one's 11. Now what are we doing with all this? We're going to combine it. That's really how taxes work. So, let's see, 7 plus 5, that's 12%, and 13 plus 9, that's 21%. So, we're going to put up the Dougie Trudeau tax system. Let's see, we got some moving graphics. Excellent. Putting up the Dougie Trudeau tax system. My simplification, every 45,000, we fall into a new tax bracket. But we're combining both provincial and federal in this one. Back to our 100 grand. Here we go. So, see, first 45 grand, we got the federal amount, which is 7%, plus the provincial amount, which is 5%. So on the first 45 grand, you're going to pay 12% on average, because they're both going to tax you. But you can figure it out by adding the provincial tax rate and the federal tax rate together. Like I said, the average for a person is 25 grand. So it's 25%. So it's very safe to assume that 1/4 of your money is going to taxes. Just make that assumption right off the bat. You make 60 grand a year, assume 15 grand of it will go to taxes. Make 60 grand a year, 15 grand of it goes to taxes. Now, this is the Dougie Trudeau tax system. There you go, Dougie Trudeau tax system. Perfect. So, here's our system. What I'm going to do again, I'm going to do another oversimplification. I'm actually just going to shrink this down to about 65,000. I'm going to cut it at about the 21%. And that way we just see less of it. $65,000 dollarinos. Perfect. Why did I do that? Because I'm going to show you some new words now. New word number 1, credits. What are credits? Credits is money off, money back, your money. Credits goes to the start of the income. So that 12% that everyone gets taxed the same, they're credits. Stuff like, there's an old age amount that says about 10 grand, you won't get taxed if you're over 65. That's a credit, because that's fair for everyone. There's not going to be a rich man that gets more of a deal on his taxes just for being old. But there are also deductions, and that's where the rich man does have an advantage. Deductions apply to that 21%. So if you find yourself a credit, like the old age credit, then you get 12% off your taxes. If you find yourself a deduction, like a prescription is a deduction, then in this case you would get 21% off your taxes for those dollars that you put towards the prescription. Prescription is $200, you get 21% off of that $200 back in your taxes. Our last word, we got one more, and it's expense. If you think it's getting a little long at this point, well then I'm going to move it. Okay, now, so we're back here. Credits, fair for everyone. Fair for all. Perfect. Deductions and expenses. What are expenses? You ever hear of someone owning a business and they bring in a lot of money, but they're not paying that much taxes? That's because they're using expenses. This is really the key to being rich. You want to be rich? Are you listening? Expenses. That's what you need. You're going to say run a company, and you're going to need to do some advertising. So you buy some advertising material like a microphone. That's an expense. So I'm not going to get charged tax on the money that I put towards my microphone. If I buy a truck for work, say I do snow removal and I buy myself a truck, then I could claim that as an expense on my taxes. And that's really the key here. You only get taxed on your profit. So if you work for someone else, everything you make is profit. But if you work for yourself, then there's a lot of stuff you can spend your money on, including debt, that will not lead you to having a profit. A very popular way of doing it is people buy vehicles, like say a $40,000 car. Well, they could take $7,000 of that and put it as an expense, so they're not actually paying tax on that. That being said, it loses about $7,000 in value in the first year. So that's why you're able to do that. And there are rules for everything. And that's really how to get good at taxes. You know the rules, but really here's the simplification. You know the credits, no deductions, know the expenses. You think I'm just going to leave you there though? Of course not. I'm going to teach you guys how to become rich. Here we go. Okay, so here's my continuation. How to get rich using deductions and expenses. Well, it's pretty straightforward. First things first, I'm going to erase this. And I'm going to give you categories. You know how I told you that there's an entire library of taxes? There's books and books of rules on it. Now I'm going to give you the simplification of it. You ready? It's a little bit selfish, but it's me. That's the acronym to remember. Me, with 2 E's, like a whining child. Me! Let's all practice it together. Me! Perfect, I heard you. What does the M stand for? Medical. That is a deduction. If you're about to die, the government's like, you know what, we're not going to tax you on that. Prescriptions, we're not going to tax you on it. Doctors that you absolutely need to pay for, that is not covered by healthcare, we're not going to tax you on. Dentist, same thing. They're saying if it's medical, if it's mandatory, if it's eyeglasses, keep your receipts, because you will not get taxed on those. Next one, employment. Employment. Everything that has to do with making you money. If you could say that I needed this mic to sell some courses, to make some money, or to sell something to make some money, then I could justify that I needed it for my employment. Typical ones that people don't really think of, but that are on their T4s are CPP contributions, union dues, and safety equipment. My peeps. Especially if you're like a welder in working at Valet, Sudbury, the mine, then you have safety equipment you could claim. A lot of your stuff is reimbursed, and hopefully everything's reimbursed by your employer. But if it's not, you could claim your overalls and your work boots and your safety glasses and your respirator. That's safety equipment. The government, you could tell the government that was mandatory, and I'm claiming it. What happens is when you have your own business, this employment category becomes a lot bigger. It starts to involve things like travel and advertising, which really, you can start to stretch your expenses and deductions. Lastly, education. A lot of people actually knew this one. If you go to school, you get a deduction. Actually, this one's a credit. This one's that 12% I was talking about. So if a 65-year-old goes to school, or a 16-year-old goes to university, same school, then they both get 12% off their taxes because it's a credit. Is it important that we know if it's credit, deduction, or expense? No, it's not. Not important at all. All that matters is that we know what's going to get us our money back. Here's the things that's going to get us our money back: medical, employment, and education. Now I'm going to do my own taxes, and I'm going to show you how these categories lead to more money. At the end of the video, I'm going to teach you how the rich really become rich. So stick around. Thought I'd add a little bit of color to this. So let's mark, like I said, education's the credit. Credit belongs to the start. Say you spent $5,000 on education, and it would be filled in like this. Let's say you spent $5,000 on prescription due, then it would be filled in here. And then you only get taxed on the center part here. Okay, I just want to make that clear. Yeah, I got some bad news, folks. So I was just looking up the numbers, and they're pretty frickin' high. You ready for the real numbers? On your first 45,000, you charge 20%. Okay. On the next 45,000, you get charged 29%. And it goes up from there. Hi, this is how to get your shit in order. I'm going to use my shit to show you how to get your shit in order. So, what do we have to do is we have to figure out what we made during the year. Number one rule, as far as government's concerned, you declare all your income. So, come up with all your income that you made in a year. Like, easiest way to do it, just look at your T4s. I have one from the Jubilee, it's a daycare. I was doing maintenance. I have one from a workers industry, something like that. It was a pension plan I was paying into when I was working at Metro. And since I'm not working there, they gave it back to me. And they gave me a T4 at the end of the year. Also, I have running room, which I asked not to get taxed, and they kindly didn't tax me. But I still have to declare it. Lastly, there's workforce. That's my income. I know I have it right in front of me, but really what it is, it's T4s. There you go, all your T4s. And T3s and T5s are investments, and Ts are tax forms. So, income, T4s, plus receipts. If you own a business of any sort, you gave your clients receipts or invoices, something like that. Then you keep those. That way at the end of the year, you obey the number one rule of the government, you declare your income. Now, rules for you. You want money off, right? So, what kind of things will the government give you money off on? Medical, employment, and education. Pretty much. I have textbooks, and I also have tuition. but my parents paid for my tuition. Lucky me. So they get to declare on their taxes, so they get the tax break as opposed to me. I made 12 grand during the year. Of that, I got taxed about $2,100. That's how much they kept from me. That's not how much I got taxed. And that's a big misconception. A lot of people think just because they took a lot from your pay stub because you were working overtime that week, that you're not going to get that money back, or you get taxed more for working overtime. I heard that one pretty often. It's not true. What happens is tax rates stay the same. You're taxed based on how much money you made in total throughout the year. I got Justin and Dougie to $2,100 from me. Of that, I'm not going to get taxed on $2,100. If there was no such thing as credits and deductions, then I would. But life is pretty, so don't need to worry about that. Something that's super excellent, the first 10 grand for everyone is a credit. It's called the personal amount, and I'm not going to write it down. I'm just going to draw it so you understand. There is 10 grand you're not getting taxed on every single year. Keep on sticking around. I'll tell you the secret to being rich at the end of this video. There we go. So that's a credit. Another credit is education. I got textbooks in there. I got about $300 in textbooks. I would show you the receipts, but that just takes a lot of time. So I'm just going to tell you. And if you have textbooks or tuition or expenses for like safety equipment or licenses or memberships or anything that was mandatory for your income that you had to pay for, even training that had to come out of your pocket, keep your receipts for those and you could declare those as expenses on your taxes. So I'm just going to keep on drawing in blue here. Those are my textbooks. Lastly, I'm starting to make money through my financial course this year, but last year I bought this microphone and business cards. So I'm expensing that, and that applies to the end of my income. That comes up to only about $100, but still it comes up to about $20 back in my pocket. So in the end, this little center amount, I already did the math, but this little center amount, it's about $1,400. Actually, for easy math, it's about $1,500, and I get taxed about 20% on it. That's about $300. Justin and Dougie to $2,100 from me, but at the end, they're only really looking for $300 based on my credits and deductions and the type of life that I lived this year. So that leaves me with about $1,800 in my pocket. And there's a credit called the Canadian employment amount that I did not include in here. So I actually should get more than $1,800 back, but we'll see. I'm going to go videotape myself, and it should take about 4 minutes if I cut the clips. And I'm just going to show you how to put your T4s in TurboTax. It's a small detail, but that'll really be everything. That way, when someone says, hey, I don't know how to do taxes, I can be like, look, go see my video. So here we go to TurboTax. Hi, this is why I like TurboTax so much. It's because the interview process makes taxes super obvious. So everyone who gets taxes ready, they know the same categories that I'm teaching you today. So I'm just going to go through the questions that they ask you to show you that it's pretty straightforward. So you have T4s, you have medical expenses, you have children, and I'll tell you what that one's about right now. You could claim babysitters, and if your kids are in sports schools like dance or hockey or karate, for hockey you could claim safety equipment or memberships or licenses. Karate, my dad was able to claim my uniform. You can't claim 10 uniforms because you can't say that 10 are mandatory, but you can definitely say 1 is mandatory. So that's why for sports schools, if you have kids, you could claim it. Donations, I haven't made any of those recently. Maybe I'll know more about that category in the future. RRSPs is the best way to save your money. What you do is you put your money in an investment and then you're covering it with an RRSP. And what that does is every year up to 18% of your income won't get taxed. Sounds pretty straightforward. It's because it is. It adds up year after year, and up to 18% of your income won't get taxed. The sooner you put your money in an RRSP, and don't touch it, that's key, the sooner you'll be on your track to freedom. Anyway, we'll continue. I'm a student. Yep. Do you have rental property? I don't. But if you did, you'd put all your expenses in, and they have a whole category for that. And what all this does is, the more detailed it is, the more money they're going to charge you. So, I have simple taxes, and I'm a student, and I have some T4s. And they recommend free. Would you look at that? There you go. I'm going to do my taxes for free. I did not use TurboTax last year. I used UFile. You could also use TaxSlayer, but I like the interview process of TurboTax. I find it very educational towards taxes. Okay, it's just an interview process. I'm going to skip through a little bit of it so I could skip over my SIN number. And then once I'm actually putting in the tax forms, I'll come back to this. So here's my computer screen. I know you can't see it that good. On the left, there's something that says T-Slips. If you click on it, you go T-Slip Summary, and this pops up. It's really all the types of T-Slips or tax form slips that you might have. I have a T4A for a pension, Canadian Pension Plan amount. And other than that, I have T4s. So now I just continue. So I'll show you one T4, and then after that I'll just kind of let you assume for the rest, because they really are all the same. There's boxes here in TurboTax, and the best way to learn how to do this is really just do it yourself. So I'll ask you employer's name, optional, but I have it here. There you go. Now just go according to the box numbers. 10, Ontario. 14, 2516. Income tax deducted, 471.10. How much of that is insurable as far as they're concerned? All of it. And you just keep on putting in these amounts. The CPP contributions, part of it you get back. So part of it is a deduction. You just put in all the amounts. If there's any union dues, you'd put it in there, and it would have a number in the 44 square. And you got to make sure that all your squares are filled out. Like EI premium. And I think that's it for me. Yep. Other than that, you just do that over and over again. Save and add another T4. If they take the overpayment that I had for my CPP plus my working income tax benefit, WITB, I just made that up. Working income tax benefit. And, wow, good for me. They also deducted $2,000 on top of that. So, this is just from making money in the country. You get $1,000 back basically when you make $1,000, which is a pretty good deal. And so they deducted about $2,000. They're going to give me all of it back, plus some. So good for me. My amounts wound up being offset by the credits and deductions, and I'm not getting taxed $1. So also part of doing your taxes, the government does give you benefits if you're lower income, and the way they know if you're lower income, it's by doing your taxes. So if you get some of your rent money back, some of your energy money back, and they get all that information from taxes. So I'm just going to fill that out. A lot of these questions, yeah, you just answer and then they give you money back. That's it. There's no, you don't have to know anything. It's really just an interview process. The last few things it's going to ask me is probably a little bit of information about my bank, maybe my account number, so they could send the money right into my bank, or they might send it to my address. And other than that, we are done. So that's it, I'm done. I just clicked I certify. Next thing you know, they're going to review it. They agree with what they see, then I'll get my $3,400 back. And you could do the same. If you pay someone to do your taxes, then they will take a portion of it. That's just how it works. This is the moment we've all been waiting for. How to get rich using taxes. And you know I'm a professional because I'm wearing a suit. So, I got one word for you. It's corporation. Why corporation? What is a corporation? That's what I'm going to teach you today. A corporation is a vehicle to make money. The idea of a corporation to me is kind of silly because you could imagine it as a person. You own, this is you. You own a company. Now, what happens when you put your company in a corporation's name, you get taxed at a rate of, like I said, the average person is 25% by the time you add up all the tax brackets. When the corporation only gets taxed at a rate of about 15%. And that goes up to about $250,000. So, you get taxed about half as much as a corporation that you would as an individual. And this happens every single year. So while you're trying to save up money, then the government's taking double what they would if your company or your job was in a corporation. Does it make much sense? Not really. Intuitively, it doesn't make much sense. But they're saying that if we allow for corporations, then people are more likely to run businesses, and businesses give people jobs, and that's why we have corporations with a tax rate of about 15%. So that's really the vehicle you need to use to get rich. That and RRSPs. I definitely recommend, if you're interested, do your own taxes. You're going to learn a lot. There's a saying in business that goes, sell the man the fish, and then you can sell it forever. If you teach a man to fish, you'll do it once. But you know what? I believe in people. So let's go fishing.